Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance and give you the real story. Get ready because today we are diving deep into PetMed Express's latest financial report. And let me tell you, there are some really interesting trends and a few tough truths in here. Oh, and if you like your financial deep dives without the corporate jargon, make sure you are subscribed and join our Discord community linked in the description below. You won't regret it. Alright, so PetMed Express, the online pet pharmacy giant, has just dropped their latest quarterly report. We are looking at their performance up to the 30th of September 2025. This is basically a mid-year checkup. Let's start with the big picture, their balance sheet. Think of this as a snapshot of what the company owns and what it owes at a specific moment. On the 30th of September 2025, their total assets stood at about $100 million. Now compare that to the 31st of March 2025, where they had nearly $149 million in assets. That is a significant drop, about 33%. A big reason for this drop is their cash position. They had almost $55 million in cash at the end of March, but by September, that had fallen to around $36 million. This is a decrease of almost $19 million in just 6 months. It screams that the company is either spending a lot or bringing in less. We will dig into why. And speaking of big changes, look at this. Their goodwill, which is an intangible asset usually reflecting a company's brand value and stuff like that, from past acquisitions went from over $26 million in March down to zero by September. That is a massive write-off. When a company writes off goodwill, it usually means they've realized that an acquisition they made is not worth what they paid for it, or that the assets they bought are not performing as expected. This is a pretty big red flag. On the other side of the balance sheet, their total liabilities also decreased from about $63.5 million in March to nearly $57.2 million in September. So they've reduced what they owe, which is generally good, but combined with the falling assets, it paints a picture of a company potentially tightening its belt or restructuring. Now let's get to the heart of it, the income statement, which shows how much money they made and spent over a period. For the 3 months ending the 30th of September 2025, net sales were about $44.4 million. This is a big drop from the same period last year, 2024, when sales were almost $58 million. That is a decrease of over $13 million, or about 23%. And looking at the first 6 months of the year, sales fell from around $124 million in 2024 to about $95.5 million in 2025. That is a drop of nearly $29 million, or over 23%. Ouch, the company itself says this decrease is due to lower advertising, more consumer promotions, and a decline in prescription medication sales. This is a tough market right now for them. Let's break down those sales. Reorder sales, meaning customers coming back for more, dropped by a significant 23% for the quarter and the 6 months. This suggests they might be losing some of their loyal customers, or those customers are buying less. New order sales, which is about bringing in new customers, also took a hit, dropping by over 26% for both periods. This combined with the drop in reorder sales means they are struggling to both keep and attract customers. Interestingly, while their sales dropped, their advertising costs as a percentage of sales actually went up a little. For the quarter, it was 9.8% in 2025 versus 10.5% in 2024. And for the 6 months, it was 10.9% versus 11.4%. This means they are spending a relatively larger chunk of their reduced sales on advertising. And while they mention efforts to make marketing more efficient, the cost to acquire a new customer is actually pretty stable or slightly increasing, which is not ideal when sales are falling. This decline in sales and increase in cost of sales naturally hit their gross profit. For the quarter, gross profit was down nearly 34%. Their gross margin, which is the profit they make after accounting for the direct costs of selling their products, fell from 32.3% to 28%. That is a drop of about 4.4 percentage points. For the 6-month period, the gross margin also fell from 30.4% to 28.1%. The company blames this on higher freight costs and more consumer discounts. This suggests that the cost of getting products to customers and making them buy is increasing, eating into their profits. Now let's look at operating expenses, specifically general and administrative. These costs soared for PetMed Express. For the quarter, they jumped by over 35%, but for the 6 months, the increase was a staggering 76.5%. This massive jump is primarily due to a huge increase in professional fees, with over $3 million spent on a whistleblower investigation. They also saw an increase in payroll severance costs and a significant increase in stock-based compensation. This is a lot of extra money going out the door on top of everything else. And remember that goodwill write-off we saw on the balance sheet. Here on the income statement, it is shown as an impairment of goodwill and intangible assets. For the 6 months ended the 30th of September 2025, they recorded a charge of nearly $27.3 million for this. This is a huge hit and explains a big chunk of their overall losses for the period. Basically, they are admitting a past acquisition didn't pan out as planned. Putting it all together, the company reported a net loss of about $8.5 million for the 3 months ending the 30th of September 2025. This is a dramatic turnaround from a net income of $2.3 million in the same period last year. For the 6 months, the net loss was a massive $42.7 million compared to a net income of $6 million in the prior year. These numbers are not pretty. Now, let's look at how this loss affects shareholders. The diluted net loss per S-share was 41 cents for the quarter and a whopping $2.05 for the 6 months. This means the value that each share represents of the company's profit or loss has significantly deteriorated. Let's check out the cash flow statement. This tells us where the company's cash is coming from and where it is going. For the first 6 months of 2025, cash used in operating activities was $14.4 million. This is a stark contrast to the prior period where they actually used less cash in operations, only about $1.1 million. This negative cash flow from operations is clearly a concern. And as we saw earlier, their cash balance has taken a hit. The net decrease in cash and cash equivalents for the 6 months was almost $18.6 million. This is more than 5 times the decrease seen in the same period last year. There is a significant detail here. The company had to restate its previously issued financial statements for the 3 and 6 months, ended the 30th of September 2024. This means their past reports had errors that needed correction. They identified issues in how they accounted for payments, rebates, and discounts from suppliers. Basically, they were accounting for some money from suppliers in the wrong place. This is an accounting housekeeping issue, but it does mean that the numbers we see for last year's comparatives are now different. And in some potentially significant news, looking at events that happened after the 30th of September 2025, the company received unsolicited acquisition proposals in December 2025. These were non-binding offers to buy all the company's shares for prices ranging from $4 to $4.25 per S-share. This indicates that some outside parties see potential value in PetMed Express, even with its current financial struggles. The board is reviewing these proposals. It is a classic case of a company potentially being undervalued, attracting interest from buyers. Now, looking at these results more broadly, PetMed Express is in a tough spot. Their sales are shrinking significantly. Their costs are rising and they've had to take a massive goodwill impairment hit, indicating past acquisitions have not paid off. The increase in general and administrative expenses, especially due to that whistleblower investigation and higher professional fees, is a major concern. They are also burning through cash, which is never a good sign. The fact that they are seeing unsolicited acquisition proposals could be a sign that the market believes the current stock price does not reflect the company's underlying value, or it could be opportunistic buyers looking to snap up assets at a discount. The company also adopted a shareholder rights plan to prevent any one entity from gaining too much control without paying a premium, which is a defensive move often seen when a company fears a hostile takeover during a period of weakness. Their core business does not seem to be growing, and they are facing increased competition, macroeconomic headwinds, and rising costs. The restatement of prior period financials, while an accounting correction, does raise questions about the accuracy of past reporting. Overall, PetMed Express faces significant challenges. While they are trying to manage costs and improve efficiency, the declining sales and profitability suggest a need for a more fundamental strategic shift. The acquisition offers might be their best hope for a turnaround, either bringing in new capital and management or providing an exit for existing shareholders. Alright, that is our breakdown of PetMed Express's latest filing. What do you think about these numbers and what they signal for the company's future? Are the acquisition offers a sign of hope or a desperate plea? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and make sure you subscribe for more in-depth corporate dives like this. And don't forget to join our Discord community linked in the description. It is the best place to connect and discuss these reports further. Thanks for watching. See you next time.